The next topic, capitalizing on energy market deregulation through automated forward curve management. Very interesting technical topic. We've got two speakers, Tristan Ranger and Boris Domananovic. I apologize, Boris, if I'm mispronouncing your last name.
It's fine.
I'll stick to Tristan and Boris. Tristan is a product development and data delivery professional with a focus on turning client need into attainable vision. He is specialized in delivering essential market information, such as prices and fundamentals, to the machines, systems, and humans that need them in the commodities markets, something we all know. Thank you, Tristan, for taking time out to talk with us today.
No worries.
Boris is an analytics manager with over 10 years working in the energy trading environment. He currently focuses on European electricity market analysis, fundamental models, forward curve modeling, electric price forecasting, load forecasting, and application programming. So he's yet another very busy speaker of ours. And thank you, Boris, for joining us.
Nice to be here with you.
Likewise, likewise. So these guys have some interesting points to make. I don't know if you have any slides that you want to pull up, but I'll get out of the way and let you guys get started then.
Sure, thanks. Thanks very much. So yeah, we've just shared some slides. Hopefully everyone can see. As was introduced, yeah, we're looking to discuss energy market deregulation and how we've helped, as Enverus has helped capitalize on that and how we can help move that forward. It was interesting. I was listening to Nazim and Andreas talk about the risks of reliance on the digital systems and indeed how digitization was sort of driving the market, and that's quite a good segue to show like one of the digitized ways of managing forward curves. Price forward curves specifically. It's a good segue into what we're going to discuss now. So moving through the agenda today, we're going to just do. We've had our introductions. We'll look at seizing the market opportunity, specifically on market deregulation rather, in the Balkans. What problems that was, what that resulted in, specifically cross-border pricing differentials. We'll look at how that problem was solved using some of the Enverus tools here, and then how that went into production and was going into production, and what that benefit is going to be from having that process there. So just to give a little recap, that's what we were, as we were introduced. I look after the enterprise data strategy at Enverus at the moment. As we talked about previous exposures, I worked at S&P Global Platts for a long time, and of course, a lot of my time is about bringing the content not just to the humans, but to those machines that were talked about in the previous session, which is a big focus and certainly how I see the market developing, how I've seen it developing over the years. Boris, you want to talk any more to yourself on this slide, or are you comfortable?
I'm comfortable. Maybe just a brief recap. I mean, I'm a manager of a team that is responsible for two main topics. So fundamental coverage of Central West, Italy, SE, and so Central East and Southeastern Europe, prices and fundamentals, and power forward curves. So these are two main kind of topics that I'm responsible for, and we'll talk more about the second part, so price forward curves.
Excellent, thanks. As you say, yeah, a big focus on how we can make that in the digitized world. So let's skip forward then to talk about where we are. Boris, you work for GenI, and I'm sure a lot of the viewers of this have heard about GenI, obviously. Got a large company, more than 2.2 billion, 470 people out of Slovenia. And I like the way that the segment on your website connects the West to the East. I think that's a very good example of how your business has evolved. It's about joining geographies across the world, across borders. Must throw up an awful lot of exciting and different challenges and different risks that you might have to deal with, I suppose. So, I mean, to give some background to the guys on the call, obviously for GenI, something started to get very exciting for you guys, when the Balkans deregulated in the 2000s, rather liquid markets, tricky cross-border thinking. lots of stuff you had to solve, and for the forward curve aspect, there was a lot of opportunity in that space, which you guys saw. So, I mean, if we were to focus on the PFCs, given the sort of the illiquidity at the time of the Balkans market, what risks did you have to sort of pay special attention to enable you to feel comfy in that space? What were you looking to solve? What were the big problems?
I mean, when talking about emerging markets, so talking about the Balkans deregulation end of 2000, yeah, we faced it was a big opportunity, new emerging markets, but with big opportunities comes risks, So I mean, besides the let's say the obvious ones, the country risk, the payment risks, there also was a liquidity risk, or actually not even having a existing operating forward market. So from that stems the pricing risk of your own new opportunities. So if, for example, we talk about Serbia back then, or Bosnia, you might conclude a deal, you don't know even how to price the deal beforehand, and then after it is in your system, how to constantly mark to market that, because there is nothing traded on that specific market. So yeah, these were kind of the biggest risks, but also at the same time, so kind of offering the biggest opportunities.
Yeah, I understand. So making sure that you could see into those markets and plot forward what might be happening, so you can mark those trades, mark those positions, and understand the internal workings of adjacent markets, perhaps as you step across.
Exactly.
Yeah. Okay. So why did you? So looking at that, it sounds pretty tricky to me. It sounds risky, like you said. It sounds like you have to know an awful lot about what's going on in those spaces. What gave you, Gen I guess, the confidence that you were able to tackle that? What was the thing that you guys could take away and say, look, yeah, we recognize all this difficulty. It's obviously a massive opportunity, but there's a big risk here. So what did you have as an advantage? Aside. Yeah. The brains, obviously. What was your
so yeah, we prepared for that by kind of investing in local, so per each specific market, local knowledge, and on the business side to kind of at least minimize those business risks, but also supplementing that local knowledge or feeding it into our fundamental analytics knowledge and growing know-how to kind of fill in those blanks of pricing. So, for example, if I go a bit into the details here, back then the emerging or the biggest, the most liquid market in that Balkans region was HUPEX, or then back then even not HUPEX, but just the OTC screen for Hungary. So, yes, that had the biggest liquidity. But then, if you knew what the fundamental situation was going to be, or at least predicted it to certain acceptable degree, then you can figure out, for, I don't know, front month, we don't expect any congestions, border congestions within that region, and you could know that you could price your Serbian deal on Hungarian PFC in a nutshell. So, and that's how we very similarly approach this problem even today. Trying to, through fundamental models and forecasting and simulations, kind of fill in the gaps for non-liquid markets, or illiquid markets and semi-liquid markets. Maybe.
No, that makes sense. That makes sense. So by having this local knowledge, you're able to really understand and extend across other markets. And then I guess the more you do it, the more you know, and so the more complex and complete your modeling becomes. Yeah, makes a lot of sense. Okay, so let's. Gives us an idea of where you were, what you were trying to do to solve the market opportunity, and indeed to maximize deregulation opportunities, as it says on the slide here. So interesting. Okay. So in solving the problems, obviously you had to do, develop and test price forward curves. That was the game here. That was the outcome that you were trying to get rid of these liquidity holes, and you had to look at quality control, support, as it says here, backup and speed, doing things quickly, making sure that everyone has access to the same group of curves so that you make consistent business decisions. Makes a lot of sense. Must be tricky. You've got lots of different people around the world with different bits of knowledge. And I see that obviously to develop that, as you were saying before, you're developing those algorithms based on that knowledge for the gas and electric futures, and also, I guess, smoothing not only across the border, like you were saying, the Hungarian, the Hutex was, the only liquid one, but also through time as well. So I guess you'd have both these things.
Exactly. Maybe just to continue from the previous points. I mean, so yeah, back then there were some, there are huge price uncertainties, which reduced now. So we have to get better and better on, trying to find out, more opportunities, or get, better than the competition of pricing stuff, forecasting and pricing deals. So, and of course, then the smoothness that you're talking about becomes even more important. So just as a quick example, if you have weeks traded and you have front month traded, weeks do not align perfectly with the months. So you want to have smooth transition there, because let's say, for example, you're pricing a deal, that has a profile. So it's not a base load deal. It has a specific profile. You might price it wrong at those transition points, etc. And also there are different levels of smoothness. So even, for example, just base peak or intraday profile. If your base peak ratio changes, so you don't have kind of big jumps from our, talking about European peak, so 8 to 20, our blocks 8 to 20, you can have big jumps from hour 8 to hour 9, and likewise in the evening. So all of the aspects of, of this, I mean, to kind of get as much as possible to, expected spot price.
And doing that across, as you say, from west to east, joining that all together to get that smoothness.
And then we get kind of, I would say smoothness, kind of, I would use a kind of, fundamental or internal consistency of market. So, I mean, for example, certain energy flows into Europe are very, predominantly constant. So cheaper north, Germany wind flowing down to more expensive Balkans region, Greece and Italy. So, I mean, keeping PFCs or price differentials logical. So you always have, the southern, you go above the north in all products is kind of important for us. So you don't have kind of wild flows in our system when we kind of simulate what our position should do, that suddenly you have energy flowing from Czech back to Germany, which is, could happen in a couple of hours, but not as a product, in a product as a whole. So in month or quarter. So that is what I mean by kind of, regional or cross-border consistency. I think that's the best expression here.
And the regional consistency, I understand. So, and as you say, getting that sort of backflow happening would be unusual, but
so that the forward curve reflect the expected fundamental situation. So
okay, that's I think that's a great way of sort of highlighting the complexity of how Gen I and you've taken the opportunity to solve those market problems and put it into a system such as Enverus's. That's what were so when you're putting stuff into when you're looking for solutions to sort of host this complex bespoke, it's Gen I's solution. That's the key thing, isn't it? It's not something which is off the shelf anywhere that's available. It's your method of managing that. So what were you looking for? I mean, we've got sort of quality control support, backup and speed here. I mean, I take it the optimization aspect must be the biggest point here, one of the biggest points, and probably the sort of how you can code in amongst these algorithms. Is that the biggest thing, or what else were you looking for? What was the success metrics for a tool you would use to try and solve these problems?
Yeah, first of all, I would just like to touch upon the first thing. The kind of requirement for us was that we were looking for something that would be fully customizable for us. So not just for the current solution, but also then be able to be upgraded, every year when we add improved logic, improved methodology. So that was kind of the key deciding factors for choosing Enverus and Datagenic back then. And as for success metrics, I mean, the most important things I would stress is predictability, stability of price forward curves in sequential runs. So unless there is, I don't know, large volume of deals or valid market information to change PFCs, they should change very stably in relation to in relation to two things: in relation to the products in the curve of the same market, and in regards to neighboring markets, so that the whole system is stable, so that again, if there is no market information to reflect changing of the flow direction, then the PFC should also not change run to run. I hope that makes sense.
I think giving the business confidence that the methods work, and showing that continuation rather of smoothness and evenness across the period going forward, so you can see no crazy numbers coming through when something's obviously illogical. That must be very important. Okay.
Yes.
Okay, cool. So yeah, I mean, with the solution goals, obviously, fundamentally tackling liquidity holes and making sure you can manage things forward. And it's very interesting to hear about your requirements for that sort of customization, holding your own content, your own maths and your own models inside a system was really key to that decision being made. So if I take us forward then into the next piece, the actual benefits that a curve builder, that's the tool that you're using to do this complicated joining up west to east and making sure things are smooth, making sure things are give the business confidence, and not to mention the same thing everywhere. Obviously, one of the things that's key is to be able to calculate all these curves quickly. Automation, so you don't have that distributed great local knowledge, taking away the risk of anyone doing things in a different way, and lots of other points as well. So APIs for integration to other systems, the audit trail, etc., and of course the key thing, bringing your relevant maths framework into the tool, so that you own that. That's something which you can customize. Like you were saying, Boris, as you take to the next step, you're able to build on sort of the MVP, if you like, the minimum viable product, which is where we're at now, or maybe a little bit beyond. So, I mean, this paints a picture here about where there's been a time benefit, prep, ingestion, verification, publishing, etc. And of course, where the benefits have hit the business as a whole on the right-hand side. We talked about compliance management and growth potential, and of course the IT spend. But this makes sense, and this just shows that Curve Builder can handle what's being put in there at the moment. But aside from improvements, what's the biggest business gain that you're looking forward to? Maybe as Boris rather than Jen I. What's the thing that's going to give you the most? Okay, cool. Look, I've got this in now. Maybe you can focus on better things or relax a bit about something. What's the?
Well, actually, it's actually okay. It's nice that you put it that way, because there is a direct, as Boris, as department head, lead. There's a direct benefit here that up till now we have been doing the PFCs more or less semi-manually or more manually. So analysts doing PFCs. And why? Because we realized how much this is important for a company. So that was the kind of last line of defense, that somebody looks through everything before it goes into the system. So, and one of the biggest things is that then of course I can use those resources for something else. But we didn't just change this. Okay, so end of day PFCs, but we also recognize the value of having more updates of PFCs throughout the day. So that is the change of frequency currently. So going from 1 to 8 updates per day in this first phase. Possibly in the future, then we'll go into, I don't know, half an hour updates. We'll see what is the optimum, because it doesn't mean that having it, I don't know, almost live is even needed. And this gives us two kind of benefits or advantages. I mean, one of the things is that the traders will always know the the most recent, or let's say the most recent position of, I mean, because if you have cross markets that are connected, of course most of them are, your energy positions shift in regards to your cross-border capacity position. So your situation can change if the market, your trading positions can change if the market prices change, even within the day. That is the important takeaway here. And the second part is, I mean, also direct benefit to our fundamental simulations, because you, even if you simulate or forecast the whole system of countries that I described in the beginning, there are always some countries that are kind of neighboring, and you do not fundamentally model. So, and you also want this, to have these price inputs always available in the system with current prices. So, for example, here it would be, if we stick to Central West and Italy, CEE, and SEE Europe, then you will have Nordics, UK, and Spain, for example, and Turkey. These are your neighboring market prices. So, not needing to check what are your price inputs for each simulation, is kind of helps the process of price simulations also. So that's kind of a side benefit, or I would say so.
Yeah, so you could actually check if, and if perhaps one of these side markets was moving in a way that you wouldn't expect, you'd be then to say, oh, okay, there must be an issue somewhere we can address or look at. And it's an extra pair of, well, an extra pair of eyes, or an extra set of expectations.
No, I mean directly. So if let's say if we are kind of running fundamental simulation for I don't know, let's say October, you would, before you run that simulation, and your neighboring countries, kind of neighboring of the system you simulate is Spain. You would check that, you would check the latest deal or latest bid and ask, what is available, latest market data for Spain, and we check, is it 30, 40, 50 euros before it enters the simulation. So if this is done on hourly frequency in the system, then let's say that you accept, and in this phase, that there are no big changes within that hour. It does help the process.
Okay, that's cool. That makes sense. Okay, so if I was that seems to sort of touch on a couple of things. So the ability to see trading position changes or potential position changes through the day seems to be a sort of a big takeaway, so that you can adjust as things move. The cross-border position would be sort of takeaway number 2, perhaps, in being able to manage that whole thing. Understand the flow and the smoothness that we talked about before is a big takeaway. And then speed, I guess, ability to run things rather than having an analyst or many hundreds of analysts run things every day, which was great. And move that into a system where you could manage that centrally seemed to be the third takeaway. Is there anything else that's that need to be like if you were going for other people watching this that are going to go through this process of thinking, crumbs, I've got this similar situation, I've got lots of people doing this over here, I need a tool I can rely on, that's mine, I can control, got my knowledge in. Is there anything? Is there a final takeaway perhaps for our audience to say, look, this is what you should definitely define up front?
Oh yeah, I mean, you almost exactly said what I wanted to say. So as much as you possibly can, try to define everything up front, because this is one of the takeaways that we kind of it was to some degree a collaboration. So it wasn't totally the specifications weren't exactly totally finished before we started working on this project together. But at least specifying requirements to the best abilities was the kind of, I would stress the most, because especially in a project like this, and coming off from that, I mean, I don't know if this sounds weird, but plan for unexpected. I don't know how else to put it, or allocate time for that, or appropriate time, because it was a success at the end. But I think that there were some kind of I don't know, not being synced in the what we want to, how we want to approach certain things.
Mm-hmm.
But at the end, of course, we were successful. And yeah, that's it. I mean, it was pleasure working with Enverus' team. I think we kind of make a large leap in a PFC generation methodology and process.
Mm-hmm.
So
so your boss is happy then. This is the answer.
Yeah.
Good. No, look, thank you so much, Boris, for that. Yeah, I think it's clear. Specifications are essential, and having time for unexpected changes or deviations, or what's possible and what's not possible, and making sure that that's thought about in any project is a good, is even more necessary when it's modeling your own thoughts and ideas and maths in a system which you have to learn and build and work toward. So it makes a lot of sense.
Yeah, maybe just one final kind of touch up at the end. So something that it was mentioned at the beginning of the project, and also clearly know what you need from your PFCs, and minimum requirements are nice to have, because this can change from business to business. I mean, let's go to extremes. If you're just a prop trader trading standard products, you don't need hourly PFCs. I'm just kind of highlighting this kind of the other end of the spectrum. So let's say if this is the very complicated, you can have less complicated, and always try to exactly know what you need for your system. Doesn't mean that more complex is better.
Yeah, that makes a lot of sense. Yeah, if you don't always need to have a sledgehammer to smash a nut.
Exactly.
But choose the nuts you want to hit hard, and choose the right size hammer to break them, and then build on that and go further. So we're coming up to time. So I wanted to make sure that that I thank Boris. Thank you very much, Boris. It's been a pleasure working with you, and I'm glad that we're able to bring to fruition what GenAI needs in this space using Curve Builder. I'm glad that it's progressing well. I wanted to share a final slide on the opportunity if anyone wants a demo of the tool. This will be this email address here will be somewhere you can reach out to and say, look, I want to have a look at this Curve Builder tool. Obviously, we can't show you what GenAI put in because it's theirs, but we can show you the flexibility and structure of what's possible, and hopefully that will be of interest to others. But with that, I want to say thanks very much again. Thanks for paying attention and watching, and hopefully that was useful.
Thanks,
Tristan.
Thanks, everyone.
Gentlemen, thank you very much for a really insightful presentation. Really appreciate your participation today. A special thank to the folks at Enverus who are our lead sponsor for this event, and without whom this wouldn't be possible. So thank you very much. And with that, we're going to take a short 5-minute break, and we'll be back in just a few. I know we're running a couple of minutes behind schedule, but the next presentation is going to be really interesting, so we encourage you to stick around. Be right back.